And my next guest has the view from regional banks, which are seeing the impact from higher rates as mortgage apps are down 15% as well from last year, and auto loan demand is dropping. Let's bring in Ira Robbins, the CEO of Valley Bank. Ira, it's good to see you again.
Great to see you again. Thank you for having me.
If I didn't preface it at all, how would you describe the consumer right now?
Definitely a bit more challenged than when they were previously. However, as you see, residential rates have begun to increase or have really increased on them, which is impacting their overall demand on the residential rates. Used auto prices have begun to come down, but they're still at levels that were above pre-COVID. So the consumer is definitely a bit more challenged as to what their affordability is today.
Because some have argued higher rates are such a help for the consumer because maybe you're getting more on your deposits or maybe you're getting more on safer investments or that kind of thing. Is there any truth to that?
I'm not so sure that's really true. I think for someone living on a fixed income, higher rates are definitely a good thing for them as they think about what type of retirement income that they're going to have. But for the general consumer, as we think about the debt levels of most of our consumers, higher rates aren't necessarily a great thing.
As you look at your borrowers, are you seeing any erosion or deterioration in their ability to pay? Are you reserving more against loan losses? Do they all seem pretty healthy and up to date on their loans?
Yeah, thankfully, the consumers that we have and even the commercial customers still seem very, very strong. You really look at areas like Florida and some of the areas in the South, and demand has been significant, and the balance sheets of these consumers, corporations, have been very, very strong. I think there's going to be a difference as to how we think about credit quality playing out across the United States. I think some areas in the Northeast where there's been contraction and some population growth are going to have a bit more of a challenge than areas like we've seen in the South, though.
What makes you, because to me, Ira, you sound more cautious than some of the CEOs certainly who have come on from the hotel space or from certain, what makes you more cautious? What are you seeing?
I'm a huge optimist as to sort of where I think we're going to end up long term. So I'm not cautious about that. But I do believe that there's this perspective that rates are going to come down. And as a result of the long end rates coming down, that everything's going to be fine. I don't necessarily believe that's going to be true. I believe the long end is going to stay higher for a longer period of time. And one of two things is going to either have to happen. Either there's going to need to be a recalibration as to where that long end is, or people are going to have to get comfortable with what that ultimately begins to look like. Because if you recall where these long ends are, they're still relatively low compared to where we've historically been.
You mentioned something that was tantalizing there about the Northeast. Elaborate, if you would, a little bit. You said that population declines. What are you seeing in the Northeast that caused you to insert that into your last answer?
I think, it's interesting. One of the things that I look at a lot is sort of where we've seen population growth and where housing permits have actually gone. And you look at the South, we've seen permits only be about half of where population growth is. So there's still significant growth when we think about where housing is going to end up from a pricing perspective. That said, in the Northeast, population growth has largely mirrored where we've seen housing permits increase. So some of the increase in those areas aren't going to necessarily be as strong. As a result, there's going to be some credit quality issues. You're going to have a rising tide in areas where there's population growth, and you're going to have some differentiation in the markets where there hasn't been the population growth.